California's insurance of last resort is supposed to be for homes with high wildfire risk. But our CBS News California data analysis finds the vast majority of homes on the FAIR plan are in zip codes that the insurance companies classify as low risk, indicating anyone can be forced onto the FAIR plan. And the numbers are increasing.
I love it, baby. I love it.
I do too.
For Ken and Lisa, their new house in West Roseville is the dream.
But hopefully we can get insurance.
I know.
That's quickly becoming an all too common nightmare.
Yeah, hope to God.
When Lisa called to transfer their insurance to the new house,
They said, I'm sorry, you're denied. And I was in shock. I thought, are you kidding me? He's been on their insurance for 30 years. And we've never had any problems. We've never had any claims.
and they're only moving 3 minutes away.
And that's why it was shocking that they said they wouldn't insure this house.
Any idea what could be high risk about this?
No clue. I was so surprised. I thought they were making a mistake, actually.
But it's no mistake. Turns out Lisa and Ken's insurer is among several major insurers that stopped writing new policies in California, meaning they're struggling to find an insurer for their new home, and the people buying their old home can't find insurance either.
Most people have mortgages, so they have to have insurance with that mortgage.
The only options? A risky, unregulated, out-of-state insurer, or the California FAIR Plan, the state's insurance of last resort, which is expensive and doesn't cover much.
It's just a frightening time to be buying homes, living in homes. Even renters are going to have their problems.
The FAIR Plan was intended for homes with high wildfire risk, but a CBS News California data analysis finds most of the homes on the FAIR Plan are in the lowest risk zip codes according to the insurer's fire risk classification, like Ken and Lisa's, which gets just a 0.34 on the insurer's 4-point scale. In fact, we found there are 10 times more homes in low risk zip codes than high risk on the FAIR Plan. And while some are being forced into the FAIR Plan because they can't get new policies, others are losing their existing fire policies.
We share a roof, we share this wall,
Like Helen.
the same risk factors.
Her Palisades duplex survived the fire, but just weeks before, she was forced onto the FAIR Plan. State Farm renewed her neighbor's fire policy, but not Helen's.
It's totally random.
And while there may be some high-risk homes here, on average, the insurers also classify Helen's Palisades zip code as relatively low risk. Why are so many low-risk homes being non-renewed?
It's a canary in the coal mine that there is a much bigger problem going on.
Rex Frazier represents the insurance industry.
They should be asking, why in the world does the FAIR Plan have 500,000 policies in it?
Because insurers are non-renewing policies. Why are they non-renewing policies?
Because we have a system in California that has not allowed companies to earn enough money to do business everywhere.
Insurers argue that California's strict insurance regulations have prevented them from charging enough to cover their risk, so they had to start cutting policies. Californians spend on average less for homeowners insurance than people in 19 other states, even though our home values and the costs to rebuild are much more expensive. Now, home insurers are still profitable in California, but a CBS News California data analysis reveals profitability has declined, and insurers rely on profits to replenish their reserves, which are also dwindling. They need reserves to cover claims after big events, like the LA fires. So you're saying if we were paying more right now for insurance, we wouldn't be in this situation?
That's 100% what I'm saying. And I've been saying that for years. How can we simultaneously say we're in a changing climate, we have really expensive homes that are built next to a lot of burnable things, and then act like, oh, there's going to be no impact on rates? That's ridiculous.
Well, new regulations will soon let insurers charge more in California. And in exchange, insurers are supposed to write more policies for people on the FAIR Plan. But here's the catch. The regulation specifies only people on the FAIR Plan who the insurers classify as moderate to high wildfire risk. Remember, we showed you, according to the insurers, most people on the FAIR Plan live in low-risk zip codes. So the regulations may not help everyone on the FAIR Plan.
I think it's outrageous. The whole point of the regulations were to get people off their FAIR Plan.
Consumer watchdog's Jamie Court was surprised by our findings and notes insurers can now pass the cost of the FAIR Plan on to all of us.
When you crunch the numbers, as you have, it shows there is no incentive to get people off the FAIR Plan.
Now, it is important to note that these new regulations do incentivize insurers to write new policies across California. Separate from the FAIR Plan, insurers can also write new policies in areas that the Department of Insurance has categorized as distressed. Take a look at the map. That includes most of Northern California, meaning insurers can write new policies anywhere here. They don't have to be for people on the FAIR Plan. But notably, places like Palisades, Altadena, most of Southern California are not considered distressed.
It undermines the entire purpose of allowing them to raise rates based on these intangible factors.
And there's no telling who might be forced onto the FAIR Plan next.
Everybody's at risk. Don't get comfortable with your insurance company right now because they can drop you like that.
Ken works at the Capitol and is a freelance news photographer for CBS Sacramento, so he and Lisa know more than most about how politics work.
We need to figure out how all these leaders and insurance companies are going to come together and say, okay, this is what's best.
Now, this is a rare situation where, after seeing our data, both representatives for the insurance industry and consumer advocates agreed they would support updates to the regulation that would incentivize insurers to write new policies for anyone on the FAIR Plan. We've shared our findings with the Department of Insurance. Stay tuned.